Hey, what's up, guys? It's Jordan with the Laundromat Resource Podcast. This is show 121, and I am pumped you're here today because today we have an awesome guest on the show, Brian Smolin, who is a laundromat owner, and we talk about his story, but also super knowledgeable about SBA loans. And in fact, we talk in depth about SBA loans for laundromats today. And it's one of the most common questions I get is, can you use SBA loans? How do you get SBA loans? And we're going to talk about all of that with Brian today. So this is an episode. I don't care where you're at in the process. Using leverage to buy assets is the faster path to building wealth. And SBA loans can be one of the best ways to actually use leverage to buy a business. So we're going to talk in depth about that. And not only that, but Brian and I are going to jump on a live Q&A August 17th at 4 p.m. Pacific time, 7 p.m. Eastern, August 17th. You're going to want to make sure you join us for that, especially if you want to ask questions about SBA loans, lending in general, laundromats in general. Like I said, he knows laundromats also because he owns them and he owns lending. So we'll be talking about laundromats and owning laundromats and buying laundromats and also financing and SBA finances. It's going to be awesome live Q&A, and it'll be, I'm excited about it. And Brian's just an awesome dude too. So it's going to be a lot of fun. If you want to get the information about that, check the show notes. If you're on YouTube, it's down below, or laundromatresource.com/show121, laundromatresource.com/show121, or go to the events page, laundromatresource.com/events, where you can see how to sign up for this event, any of our webinars, any events that we got going on. There's always stuff going on over there. So make sure you're checking there frequently, laundromatresource.com/events. So come join us for that live Q&A. Okay. That's all I wanted to say. That's today's fast lane tip, by the way. Live Q&A with Brian Smolin, talking about laundromats, talking about SBA loans, talking about laundromats and SBA loans. Going to be incredible. All right, let's jump into it with Brian. Let's get into his story, and then let's talk about some SBA loans. Brian, how's it going? Thanks for coming on the show, man.
Hey, Jordan, how's it going? Thanks for having me on. Glad to be on today to chat with you.
Yeah, I'm glad you reached out and we got in contact and talking about some cool stuff today. So I'm super excited to chat about all of that. And I'm doing well. Thank you for asking. Before we jump into today's main topic, why don't you give us a quick little background? Who are you and how did you get to this pinnacle of life where you are on the Laundromat Resource Podcast?
No, great question. So I would say my background is kind of traditional to most people that own small businesses. So came out of school, worked in corporate finance at a variety of firms, then did that for 3 to 5 years, moved over to at the time, small startup, WeWork, which most people do know the story of that company. Spent another 3 or 4 years there. And then due to some stuff going on there, my job was eliminated after a little while, and then spent a little bit of time working for a variety of small companies, doing some real estate investing for myself, and then started to get the itch after I sold my first home after the first wave of COVID to look into small businesses. So I was looking at the time was already under contract for some commercial real estate, and being somebody that I don't have a single creative bone in my body. So everything I'm drawn to is operational in nature. So I was looking at stuff like car washes, laundromats, things that it's really just all about the process and the people and just being consistent with it. And after speaking to a couple people that have had a ton of success in the car wash industry, all of them said that they would never change it, but if they could redo it, they would have gone the routes of laundromats. I said, well, that's very interesting because that is the other thing I'm currently looking at. So after realizing that at the time that getting involved in a car wash was just slightly out of my price range, even if I was able to get into one, it really would have put my back against the wall because the stuff that goes on from a maintenance perspective when you purchase a value add anything is big dollars. So from there, I really kind of pivoted and just really started looking into laundry. So I'm located in New York, I live on Long Island, and was looking at a variety of them, looking at stuff on Long Island, looking at stuff in the boroughs, and going into literally everyone I saw, no matter where I was, if I was on vacation, if I was just stopping at the store and there was one next to me, I'd go in there, take a look, and the common denominator for all of them was that, wow, these places are disgusting. 9 out of 10 of them were terrible. I wouldn't want to do my laundry there. And that's when it kind of clicked where I was like, okay, if all these stores are in business and they're run like this, it can't be that difficult to do decently well if you're running it well. So, being somebody that didn't have a tremendous amount of starting capital, I was automatically looking towards, okay, how am I going to finance this thing? So, the first thing I did when I was looking into it was ones that were pre-existing, and as you know, and you've gone into it many times with your underwriting and stuff like that when you discuss it, is that it's very hard to come up with real numbers. You do need to assume a lot of things, and all of them just weren't adding up. So I got connected with an individual that worked for a distributor and started explaining me to go down the route of building from the ground up. And at first, it didn't seem like something that was attainable to me due to just the extremely high startup cost. And the more I kind of looked into it, the more I kind of thought it through and realized that it does give you the opportunity to really build out your store exactly how you want it and put all the controls and the technology in place to really allow you to run it as hands off as you can be. So you're still there all the time, but if you want to step away, you could still have that ultimate transparency into your business if you step away for a day or a weekend. And going down that route, I realized that, yeah, I'm going to need some sort of financing to get this across the line because 200 grand is not going to do it. So, leveraging my real estate background, I automatically knew that going whichever way I was going to go from a financing perspective, whether it was raise equity from people or some sort of debt product or SBA or the machine financing or the equipment financing arms of the equipment I'd buy, that I would need that. So as I was going through that, I realized that, okay, the best people to work with are typically your small community lender, because once you go through that application process with anything, with a big bank, your Bank of America, your JP Morgan, you're really just numbers on a page. So going with a small community bank, it's more relationship based. They do have that alignment with investment in the community. People don't think so, but it is true. The small community banks do heavily value the relationship, the type of thing you're opening, and past experience and other things. So going through that route, I went the small regional. Now, from there, that was just the start. So what I had to do from there was also build out a business plan and financial projections and all sorts of other things that went involved in that. And by some miracle, my loan ended up getting approved. And that's how I ended up opening up my store, as well as that's how I ended up going with the SBA option. So I know I just said a lot right there.
Yeah. Yeah. You just went straight for the heart there, straight for the jugular. I love it. Okay. So, I mean, let's back it up here just a second. So did you build a laundromat? Did you buy one? Talk to us about what you actually did.
Sure. So my store I opened in Nassau County, Long Island. So it's just about 45 minutes outside of Manhattan, and it's in a decently sized shopping center. And we did pretty much a white box when we signed it. So it was you walked in the door, it was just four white walls and a ceiling. It was previously, I think, like a dollar store, or not like a Dollar General, but like a dollar-esque type store. So we had to bring in everything.
Yeah. And just so everybody's on the same page, a white box build out is basically taking a space that was not a laundromat before and adding the infrastructure and everything that you need to turn it actually into a laundromat. Did you purchase the real estate with this, or is this a lease of a white box basically and a build out there?
No, although I would love to be in a position to acquire the real estate as well, just because I'm in real estate. So for me, it makes complete sense. This was a large shopping center, so it wasn't in the cards to acquire this real estate. So this was just a pure lease
No,
model.
not yet. Uh,
Someday.
yeah. Awesome. Okay. So you ended up using an SBA loan to do a white box build out, basically. Is that
Yes.
okay? Okay. And when did you say you opened your store?
So I signed the lease, I want to say pretty much New Year's Eve of 2020.
Okay.
I then, so they started breaking down April of 2021, and we officially opened the doors February of 2022.
So it took a while to build that thing out.
Yeah, for sure. So, I mean, we were building and signing in the height of COVID. So, of course, with anything, you has a lot of positive and negatives. Where the space I'm in today, being that we did sign at the height of COVID, we never would have been able to afford if we signed this 6 or 8 months prior, or even 6 or 7 months ago from today. So we got extremely lucky with the lease terms that we were able to lock in for what amounts to 25 years of term.
Yeah, I was gonna ask, what kind of lease did you get? Did you get like a 10-year with 5-year options, or?
Yes, that's
Okay,
exactly what it was. It was a 10-year base with 3 5-year options.
nice. And you got some good terms on that. Well, there was a lot of during that time because it's interesting, right? Because during that time there was a lot of panic among specifically retail landlords where they were looking around, being like, all these businesses are down and can't pay their rent. What's going to happen? Like, are these businesses going to survive? Are we going to be out all this rent? Is there going to be anybody to come in and replace that? So, like you said, you came in at a really good time to come in and sign a really good long-term lease that probably helped that landlord breathe a sigh of relief during a very tumultuous time. However, also during that same time, we saw prices for equipment skyrocket. We saw labor costs skyrocket. We saw timelines lengthen, supply shortages, all that stuff. I'm sure all that played into. Can you talk about what was that experience like?
Yeah, so being that I've spent the majority of my career in a variety of corporate finance positions, large companies, small companies, that I kind of understood my underwriting when I was coming. So I knew that, okay, everything's going to take longer than it expects and it is going to be more expensive, whether it be an additional permit cost or something that was unforeseen. So you do need to plan for that. Like the construction company I used to build out my store was absolutely fantastic. I can't say a single bad thing about them. I mean, coming from a background where I built my first house, I worked in construction as a kid. Like everything completely pinned straight. Like their work was phenomenal. That said, there were small overages with their work. It wasn't anything major, but it's stuff that's expected. Like you said with the machines, we locked in at one price and we got hit with increases by the time it arrived because our machine order was put in maybe a week after we signed the lease. We didn't get them until 9 or 10 months later.
Yeah, that was crazy. I mean, there was some like long lead times, 9, 10, 12 plus months sometimes for that equipment, which is crazy.
Yeah,
How'd you find this construction company? Is that somebody you work with the distributor? Did you go out and find them yourself? How'd you get them?
Yeah, so great question. And the way I found them was through the sub distributor I was working with at the time. So when I was looking at ones that were pre existing and already up and running, I was looking to see if there was like a consultant out there or just someone that I could kind of bounce my numbers off of. Like, okay, this is where I am, quote, fairly confident, but what's missing? So when I went through with them, they were like, all right, your stuff is pretty on point where it should be. Like, there's a couple of things we change or tweak, but more or less it's where it should be, which I was already confident in, but just trying to figure out why these offers or none of these deals I was looking at made sense. And then that's when they started going into, okay, everyone's going to try to pitch you on this is what it does, but I can only show you this. So now you have this delta between what they want to sell the business for, what they can actually show the business does, and what they're telling you they're putting in the pocket. And anyone that's buying a business knows that you can only purchase that business based off of what they could show you. So that's why all these deal after deal was just falling apart once we got into due diligence. So this person also does project manages the building of the stores. So he has relationships with construction companies that come in and they built my whole store. So he was not only my sub distributor, but my PM as well.
Nice. Yeah, that's awesome. That's hugely helpful to have somebody who knows the business on your side, and also having a construction crew that gets this business right. It's not necessarily super complicated to build out a laundromat, but there are some things that some nuances to this business that don't really apply to other businesses. Particularly when it comes to plumbing, electrical, that kind of stuff.
Oh, absolutely. And the thing is what some people don't realize also is that I'm confident I probably could have pieced together the right people to come in and do each part, whether it be the plumbing, the framing, the electrical, placing the machines, building out, doing the tile work, whatever. I'm confident I could have figured that out. But at the end of the day, you're also up against a clock, where being that this is such a infrastructure intensive build, you're not just opening up a retail store where you're slapping some shelving or a deli where it's some equipment and refrigerators. You're doing massive work to the infrastructure of these stores, and that stuff takes time. And your rent free period is a finite amount. So if you don't get those doors open by that time, well, now you're paying rent, which if you're in a high rent market, could be $6, $7, $8,000 a month that's coming out of your pocket month after month. So even just a 2 month overrun could be $15,000 to $20,000 that's coming out of pocket. So I knew that nobody works for free. So even though this person was introducing me to the construction company or was being the sub distributor for Dexter, yes, I'm paying a premium somewhere, but you're paying it regardless. So you might as well pay it and make sure that it gets done correctly and on time.
Yeah. Yeah. Which is, yeah. I mean, I think it's a really great perspective. And, particularly when you've got that sort of lease ticking there. And it sounds like you did some good work in negotiating some free time to allow for the construction and the actual build out, to happen where you weren't paying. Did you make it in time?
Yeah, we got very fortunate. So what happened with us is we were 9 months post permit. So what ended up happening with us is it took 4 months to get the permits approved, and that's with using an expediter. So from day one, we were working with an engineering firm to make sure everything moved along quickly, and it still took us either 3 or 4 months to do that. Then on top of that, we had 9 months. Our construction crew that was in here doing it, they were always on time. Like they were ahead of the game for the whole entire way. It was really just the issues with the getting the machines in place. And even with that, we still went about a month and a half over. And fortunately with that was our center was sold like 2 months after we opened. So
Whoa.
like the month and a half that we eventually would have owed in back rent just kind of went under the rug.
Sweet. Yeah, that's awesome. And you know what? I bet that a big part of the reason that they sold when they did is because of the lease they signed with you guys. Because, when they lock up that space and that long-term lease, that looks real attractive to a buyer. I've got a stable business here that's going to be here for a couple decades. And
Yeah,
what I mean?
that was definitely part of it as well because when we came in, there was definitely some vacancy within the center. And then right after we signed, they had like 3 or 4 other stores that also came in. So they started filling it up. And for whatever reason, the REIT just decided it was time to sell their portfolio.
Yeah.
So I'm sure they did right by themselves.
Yeah. Well, way to go making other people rich. Let's talk about you, though. I mean, how's the business doing since you flung open the doors?
No, it's been good. I mean, you always want it to do more than what you're currently doing. We're like 14 months in, 14 to 16 months in, and we're just kind of a break even. So you'll have a couple months you'll have a month that's slightly above, a month slightly below, depending on like just the variables. But it's really kind of trending to where we want it to be. And being in the suburbs, I kind of expected our runway to be probably around 2 years before we were really chugging along.
Yeah. Yeah. Well, and I mean, that's a question I get asked a lot is like, okay, if I build new, everybody kind of, and I just had a consulting call this morning where we had this exact discussion and the guy was like, I'm thinking about building new. And I'm like, okay, we need to talk about the runway to actually get the thing built and the machines installed and to where you can open doors. Cause there's a runway there. What a lot of people don't think about is that the runway after that actually can be pretty substantial also to get to that break even point and then profitability. It doesn't usually happen where you fling open the doors and the floodgates open and money is raining from the skies and you're swimming in your vault.
No, not yeah, absolutely, and that's actually one of the biggest things we focus on when I work with clients myself on the SBA approval process is really being realistic and covering yourself for worst case scenario. But to like your point, if you're in other areas, like I'm in the suburb, people drive to you, people are more spread out. My client that's in Brooklyn, Crown Heights, that just opened like 2 weeks ago, called me after like 8 days of being open. He's like, all right, I'm a little nervous. He's like, it's 2 o'clock and we haven't had a single person in the store. I'm like, that's fine. You're only like, you don't have a customer base. Yeah. You're building a customer base. I'm like, what do you do your first week? He's like, we did $5,000 our first week in self-service. I was like, do you know how long it took me to get it into the suburbs? I was like, awesome. I mean, you did what you should have done, but like, that's phenomenal that you're doing $5,000 week one of being open and you're worried about not doing anything at 2 o'clock on a Wednesday.
Yeah. 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 That's awesome. Yeah. $5,000. I would have loved to do $5,000 when I bought my first laundromat and was losing money when I thought I was going to be making $5,000.
Oh, it took us months to get to that.
Month. I mean,
it was 6 or 8 months before we had our first $5,000 week.
Yeah. Yeah. And it takes time. Like, and that's something if you're thinking about building it out, you just have to kind of factor that in. It takes, I think people think like, okay, it's going to take a month or two. But no, I mean, what I pretty commonly see is 8 to 18 months, really. I mean, like that's kind of the runway that I see for to hit that break even point and to kind of cross over into profitability. And sometimes it can take longer than that even. And so, but that's something that you need to factor in. What I don't want to see happen, and I have seen happen, unfortunately, is people use up the majority of their capital to get things off the ground, and then they don't have enough to cover that runway, until the profitability point, and that can put you in a
Yeah,
really
and
bad situation.
that's the biggest thing,
That's the
because
ish.
if you screw that up, you're dead before you've crashed before you even taken
Yeah,
off the ground.
exactly. Okay, so I wanted to talk to you just a little bit about first of all, thanks for sharing that stuff, because I mean, I think, like I said, I think that stuff is very valuable just for people to hear. Like, here's what it actually takes. You know what I mean? Because it's easy to talk yourself into things without actually knowing like kind of what it takes to build that
Oh,
out.
absolutely.
Yeah, and I see I see that a lot. I spend a lot of time talking people out of things they've talked themselves into with my consulting. So I'm sure you see some of that too. Okay, so I wanted to chat with you just real quick about what did you do? So one of the obstacles when you build, or one of the things that you have to kind of make happen when you build as opposed to buying is, when you build from scratch or from white box or whatever, there's not a current laundromat there, and then there is one. Every single one of your customers is currently doing laundry somewhere else, right? And I call this a very habitual or rhythmic business. So people just kind of get in a habit. They go to the same place to do their laundry, usually on the same day, usually at the same time ish, and when you build brand new, you have to break habits of people and entice people who are currently doing their laundry somewhere else, some other way, to come do it with you. So, can you talk a little bit about how you got people to come to your laundromat?
Yeah, so that's one of the things I really go into heavily with my clients when they're saying like, okay, how long should we expect? And to your point, it is something that is just, you do the same thing. Like when you find a place, whether it being going to the supermarket, or I would say even putting the gas station in that as well, where you have your routine. You go to the same exact supermarket every single week, whether it be twice a week, 3 times a week, once a week, whatever it is. You have a lot of things going on in your life. So it is a mindless activity. And we're all people of habit. We don't like change. So you have a long day. You come home from work. You're dealing with the kids. You need to go to the supermarket. Your mind's going in 6 million places. 2 weeks ago, you saw that new supermarket that just opened up that you want to go to. You keep telling yourself you're going to go there. You come home from work. You get in the car. You go to the supermarket. Next thing you know, you're at the supermarket you always go to, because we are people of habit. We are creatures of habit. We do the same thing. We like doing that. Same thing goes for a laundromat. So even if people have passed it and want to come, they still might go to their other laundromat 2 or 3 times before they eventually come to yours. So it's really that day one, that first year, it's all about just being as consistent as possible. Like for us to get people through the door, of course, we were doing Facebook marketing, we were doing Google AdWords, posting in the local Facebook groups, things like that. But that only goes so far. I mean, it's definitely helpful, but the biggest thing is, regardless if you get 10 new customers that first week or 100 or whatever it is, just providing an unbelievable experience to those customers as soon as they walk in that door.
Yeah, I love that. One of the things that I always recommend too is, whether you're, opening up a laundromat for the very first time where there wasn't a laundromat, or if you're just kind of taking over, you've maybe done some, some touching up or whatever, and you're trying to get new customers. Again, kind of going back to what you were saying, like, it's habitual and it's mindless and people just kind of do it, right? One of the things I found to be super effective is do something dramatic that sort of forces them to snap out of that mindlessness, right? It's like when when you got like a habit, like it's even like driving, right? You're driving along, you can pretty much drive, after you've been driving for a while, you can pretty much drive almost with your eyes closed. You just kind of do it mindlessly. You could be thinking about other
Yeah,
stuff. But the moment somebody pulls in front of you, you're paying close attention. You are focused on what's happening there, right? And you almost want to do, on a less dangerous way, but you almost want to do something similar when you open a new spot or you take over a spot and you've made some improvements and you're trying to get new customers. Is you need to kind of snap them out of that mindlessness and do something dramatic. And there's a whole lot of different ways you can do that. You can offer free washes that piques people's attention. You can do the famous now double your money promotion where people put money on your loyalty card and you double it. Now they're coming back forever because they have all this money on the card and they have to come back to use it, right? So something dramatic, something that's really eye-catching, something out of the ordinary to sort of snap them out of that habit, that mindlessness, and get them changing those habits and coming to your place and checking it out so that you can then provide them that incredible experience that you were talking, which is awesome.
Yeah, and it also, like, all of that really depends on what's around you. So for me, I have probably within a 2 mile radius of my store, probably half a dozen laundromats. They are all disgusting. Like, they're not even in the same league of like how my store is. So for me, I really wasn't pushing these crazy promotions. I don't believe in giving away things for free. The biggest thing I did was just one, I was fully attended from day one. And the way I hired was I didn't even care if somebody came in and was like, I have experience in laundromats. Like, I don't care about that. This is a simplistic business. I could teach you how to fold laundry. I learned how to fold laundry from an industry video, and we do it all that way. So all those things could be taught. My thing was just people that were genuinely happy. They smiled when you spoke to them and can engage with the customer, because that's the thing I'm going to blow them away with. Like, when I go into the places around my store, I feel depressed because you walk in and they're filthy. It's not a pleasant place to be. Where you walk into my store, you have music playing, you have TVs on with music videos, you have a nice experience, you have pleasant customers, you have my staff that's engaging with you, and those things, that is the approach that I took to blowing my customers away.
Yeah, and the customer service thing, I mean, that is by far the best thing that you can do when you build a store or take over a store, is improve that customer service side of things. And I love, like, using the language of blowing them away, right? Like, you want to wow them, right? Wow them with the level of service that you're providing, and that's going to bring them back. They're going to come back because the experience is so good. Like, nobody wants to be doing laundry, right? Nobody loves laundry. Almost nobody loves doing laundry, right? But if you can provide a great experience for them, painless, it's fast, it's positive, then man, if you can make that miserable chore less miserable for somebody and maybe even borderline enjoyable, man, they're gonna love you. They're gonna come back for life.
Yeah, and that's really that was another big driver for what really piqued my interest in the industry as well, and like really what's dictated how I've approached the business. So I grew up middle class family. Me and I'm one of three. A sister 3 years younger, sister 3 years older. We all did a variety of activities, whether me in multiple sports or my sisters in dancing school or whatever. Come Saturday or Sunday, my mom had a pile of laundry from the floor to the ceiling. So we always had a washer and dryer in our house. But there were so many times I remember her where she would pick it all up, throw it into bags, and either take it to wash and fold or do it herself. And growing up later, to her, it was never a negative experience. It was actually enjoyable for her, because for that middle class mom that has the kids, the family, all that stuff going on, that's also a escape for her in a nice place. So my mom didn't go to the closest place. She went to the place that was maybe a little bit further, but provided the nicest experience. She was able to go there, spread everything out, take up 3 or 4 machines, sit, read a book, listen to the Yankee game, and get what would have been 3 or 4 hours worth of, even more, 4 or 5 hours worth of stuff done in an hour or 2 hours, and have a nice experience doing it.
Yeah. Yeah, and that's hugely informative, right? Like, because I think that there is a lot of business out there that we could have if we can provide an experience like that, right? Where it's not like, I'd say, I mean, you guys had a washer and dryer. Like, you guys weren't the typical laundromat customer, right? But because number one, kids are filthy and disgusting and create a lot of dirty clothes, and number two, the experience was good. Your mom would go out and do that, right? And so that was business that laundromat owner got that they wouldn't normally have they hadn't had a good clean laundromat where that had a good atmosphere for your mom to go and do that. And I think there's a huge lesson that we can learn from that in this industry. And I like the fact that we're moving that way. But to your point, 9 out of 10 laundromats in certain areas, especially, are still what we call like a zombie mat, right? So there's a lot of
Oh
opportunity
yeah,
there.
and it's being like very business minded, and like as much as I'm willing to take risk, I'm very risk where it's like it's very calculated. It's these very unsexy industries and whatever. But if you walk into a laundromat, or the success of a laundromat depends on providing a bright, clean, enjoyable, safe environment for your customer. That's it. There's not a ton of variables that go into it. There's not a ton of moving pieces. And you see it time and time again, people screwing it up because the fact that like our business is quote unquote based on 5 turns a day. And if that takes what? A store 2.5, 3 hours to do 5 continuous turns. So if I could get my store running 3 hours a day and then shut down shop, that would be amazing. I'd be a rock star.
Yeah, you would be.
So the way I like to compare it to my customers, like it's just about long-term execution. If you could just master those things and being consistent for 2 years, you're going to do well. It's just be getting over that hump of the struggle of getting to break even and just being able to do all that stuff. I mean, my biggest comparison I like to make it to, because everyone could relate to it, is that no matter where you live, no matter where you grew up, if I told you, do you have an idea? Like, could you think of that one restaurant in your neighborhood that is awful? You wouldn't go there. It's been around forever, but it's there. It's been a staple there, and the food's terrible. Everyone could think of one. They might not know it by name. The person that runs that poorly, like that poor experience restaurant, is probably 10 times more sophisticated than your laundromat owner that runs a disgusting laundromat. With me, big deal. If I over order soap one week or 1 month, whatever, I just put it on the shelf and I use it when I get to it. You could mismanage a laundromat for 10, 15 years and still not go out of business. Whereas if you mismanage a restaurant, you could get away with mismanaging costs 1 month, 2 months, maybe 3 months. But at some point, you will manage yourself out of business. So the bar is set so low in this industry. It's just approaching with consistency and looking at your customers more than just people putting money in your machines.
Yeah, that whole section right there, that is gold. You know what I mean? That is gold. And the whole reputation of our industry, which is that it's dirty and shady and all of that stuff, is based just off of that, where people did have and do mismanage their laundromats for decades. And in fact, up until pretty recently, there was a lot of pride in being able to do that, right? And in being able to say, yeah, I've had my machines for 30, 40 years. And, I basically spend no time, effort, or energy on my business, and it brings me money, which is fine. There's nothing wrong with that. If you have systems, processes, and people in place to help you manage your laundromat and minimize your time, right? But if you're just kind of letting it float out there, that's why we have all these zombie mats, is because the bar is so low on what it takes to manage a successful laundromat in most areas that, like you said, that consistency is really key. Like that's the standard, that's the bar. And if you can go beyond that, even better, but you got to do at least that. And like you said, if you can do it for 2 years, you're going to be successful. Love that.
Yeah, and I think also the biggest reason why you have these stores in such the dilapidated shape you see them today is because you have these people that are now in this unrecoverable spiral. So what I mean by that is that, I mean, most people, you tell them, if you report, like I report every dollar I make. We bring in a significant amount of cash, especially on the self-service, probably 50%. Every dollar of that goes into my bank account. Why? Because like this year won't matter, next year won't matter, probably won't matter for a couple of years. That said, in when I want to leverage other financial products against my business, whether pull debt out of my business and not pay taxes on that, or if I want to expand to another store, or whatever it is, by me having everything reported like that, that gives me so much optionality, which far outweighs the 20, 30% I'm going to pay in taxes when I do get to that point. If you have a good accountant and whatever, you're going to be able to minimize a lot of it from either having certain expenses that would normally you could layer onto your business or things like that. But you now have these people that think you're an idiot for not for reporting your income like that. And now what happens to them? They get 8 years in, 10 years in. The store needs a little uplift. They need new machines, but guess what? You look on their books show nothing. They've been taking a loss, or they've been just barely getting by. Well, if I'm a distributor, if I'm a bank, there's no shot in hell I'm going to give that person a loan. So now what's their options? They don't have any ability to obtain credit. Their store needs work. So all their choice is just to continue running that store to maybe the best of their ability, which they're probably not doing until that lease expires.
Yeah, that is, yeah. I mean, I love that. And I'm 100% on board with what you're saying there. And I think the pros significantly outweigh the cons of doing everything above board, right? And you're right. There are a lot of people in this business and other, similar kind of cash businesses that, will scoff at the idea of reporting all the income. However, I think the pros significantly outweigh the cons, and like you said, a lot of the tax things can be minimized through, like you said, running. Again, this is not tax advice from either one of us, but just to be clear on that. You can run expenses through your business, and you can do things like depreciate your equipment, all that stuff, make purchases to improve your business and depreciate that. I mean, there's a whole lot of things you can do on the tax side to really minimize or even completely get rid of your taxes for your laundromat. That is not unheard of, and it's not that complex to do if you find the right people to help do that. However, like you're saying, the availability of tax-free loans to go out and buy another business or do whatever you want to do with that money, you're going to get a lot more opportunity for that if you have good books. And also, when it comes time to sell, your business is going to be more valuable because you have clean, clear books and you can show the amount of income that you've been able to bring in through your business. So a lot of benefits.
Oh, absolutely, because that's what you run into, and why most of these deals don't make it to the finish line when you look on LoopNet or Biz Buy Sell. Like, there's 6 million laundromats in almost every market, but the valuations make 0 sense because they don't report anything and they're expecting to get this, whereas based on what they could show, it's worth here. So these people run into this idea that they want their cake and eat it too, where it's like you get one or the other. You could either pad your pockets over the course of your business life and then sell it for what you could show it for, or you could reflect it the right way and then reap a large windfall when you do decide to pull that trigger. But you usually can't have both. It's one or the other.
Yeah. Plus, obviously, not to state the obvious, but I'm going to state the obvious. It also minimizes your legal risk and the ramifications of that when you report properly.
Oh, yeah, absolutely. That as well.
So seems like that should be obvious, but it's not super obvious in our industry, I guess. I don't know. All right. So awesome stuff. Like super duper good stuff. I can tell you've been immersing yourself in this industry and that you've got some savvy even beyond this industry. So it's really cool to hear you talking about this stuff. I want to go back because this is something that gets brought up a lot in my consulting. I'm sure you hear it too. And that is SBA loan. So you talked about how you use an SBA loan. So I'd like to go back and just talk about SBA loan. How do you get an SBA loan? What are the pros and cons? Well, let's start with pros and cons. Can we talk about some of the pros and cons of an SBA loan?
Yeah, absolutely. But I'm going to even take a little bit further of a step back and just explain what an SBA loan is.
Great idea.
So an SBA loan is any standard loan that you could get from a bank. That said, it is a program that insures these banks against their losses in the event of defaults so that these smaller regional banks, these large institutions, can feel comfortable making a loan. Because in reality, a large institution really has why would they ever make a loan to me starting up a business from the ground up, considering the failure rate on small businesses? So this is a government-sponsored program that's insured by tax dollars where they say, all right, make these loans to these small businesses, and in the event it defaults, we will backstop it.
Yeah. And it just SBA stands for Small Business Administration, right? So these are business-specific loans, and it works similar to like a mortgage, on your house, where the government kind of backs these things up. And the government is pro home ownership, and the government is pro small business in these ways, right? And so this is one way of demonstrating their support, I guess, for small businesses to help small businesses get started. Now, SBA loans and laundromats can be kind of tricky, which maybe we can talk a little bit about. But first, let's jump into some of the pros and cons of SBA.
So, so I would say the biggest pro is the fact that one, it allows you to get into an industry that you normally wouldn't be able to get financing, regardless of what it is. I mean, they look at the risk profile of the industry, and I mean, the laundry industry is considered mature. Laundromats have a 95% success rate, more or less. So from
Real
a
quick,
underwriting,
can I add? Sorry, I didn't mean to interrupt you, but do you happen to know where that statistic comes from? Because I have yet to find that statistic somewhere, but I hear it all the time.
I no, I actually pulled it and quoted it when I did my first business plan. So I included that into
Where
my
did you pull it
application
from?
when I had my business. I'll have to get
Yeah,
it
I
for you
would be
after
curious
this.
because I cannot find that anywhere. If anybody knows, if you're
It's
like, shoot me an email or comment if you're on YouTube. I'd love to know where that stat comes from because I haven't been able to find it. But I hear it all the time. I was just
Yeah,
curious.
it's probably some consulting firm like a McKinsey or something like
Yeah,
that that put it out when they were doing some sort of engagement, and it's become the standard
yeah. I
term.
will tell you that stat single-handedly did a lot of mental damage to me when I was struggling with my first laundromat. I'm like, how am I in the 5% that's not being successful right now? I'm losing money. But
Oh,
yeah,
absolutely. Like I struggle with that too, where it's like you're 16 months in, and there's so much that goes into it, whether like where you live, all the different things that go into it, where you just got to stay the course.
yeah, absolutely. Okay, so I didn't mean to interrupt you. You put that stat, and I was like, I wonder if he knows where it came from because I have not been able to find it. Okay, continue. So pros are you can get in the
So
industry, it's a mature industry, high success rate.
the other pros is that typically you're going to get a longer amortization period. So what I mean by that is the term of the loan. So how many years you need to pay it back. So if you go through equipment financing arms, so like Dexter or an Eastern Funding or what newly came out, Clean Laundry, all those you might get a loan for 7 years. Okay. Well, if you could get one through the SBA and extend that out to 10 years, now those payments are substantially, that 3 years additional in term is going to substantially reduce the pressure on your P&L. I mean, sure, you'll pay more interest, but you have a much lower bar to clear to break even if you're doing it over 10 years versus 7. So that's one of the first things. The other thing is the flexibility with them. So what I mean by that is they will do a variety of things that are really helping you out. So one would be you get 6 months of interest only. So for the first 6 months after you go to closing, you are only paying on the interest component. You're not paying that fully amortized loan, which could be twice as much as what that interest payment is. So again, it's these things that allow you to lower that bar from a expense perspective on a month over month basis to get you going in the right direction.
Yeah, and that allows you to number one lengthen your runway, right? Because you're able to have more capital that you're generating from your business, so that you can last longer to get to that critical break even point and then merge into profitability. And it also, if you can get there, it allows you to cash flow sooner too. And that's more probably particularly if you take one over existing, but that's another kind of perk. Okay, what some of the cons of SBA?
Well, another one big thing on the plus side is their LTV is a lot higher than where you're typically going to find it. So with SBA, they will go up to 90% LTV,
That's loan to
loan to
value. Yeah.
value,
Okay.
meaning that if you're doing a loan for your whole cost is $1 million, they will bring 900,000 to the table, and you bring $100,000 to the table, which is huge.
Oh,
Again,
huge.
there's negatives to being that highly levered, but that's a plus just to be able to get you on the playing field.
Yeah, that's massive.
And then from a cons perspective, and this is something that I continuously drive home with clients, is being that it is a government sponsored program, is that they typically require a 1-to-1 collateralization ratio on the loan. So so what that means is for every dollar they lend you, they want it supported by either a piece of equipment or real estate. So when you're doing a full build out, again, we'll use that $1 million example. So everything all in is $1 million. You're going to bring $100,000 to the table. They will bring $900,000 to the table. Okay, great. That's now your starting point. So now, how are they going to look to collateralize that 900,000? So in my case, where I did a lease, all the cost to build that out is would be uncollateralized, because if we go out of business, they're not going to be able to recoup any value from the sheetrock on the walls, the paint, the wiring, the electrical, all that stuff that went in, because the landlord owns that if I ever leave the space. So the bank doesn't get any benefit. So say that's 300. Now you have your equipment, which might be 600. That is a hard asset. So now if you go out, they could come in and physically take that equipment. So that is collateralized against that. So with that exposure, they need it shored up some way. So for that 300 grand that you need to build out the space, they're going to look to take a lien against somewhere. And for most people, it's going to be their personal real estate. And that's the biggest thing I try to stress with people is like, listen, this isn't just signing for a loan. If this goes south, they have a second mortgage on your house. So you better make sure you're confident with the business plan, you're confident in this is the industry you want to go into, and you have the funds to get you to the end of that runway where your business is supporting itself and paying you money. And that's just a very big thing that people need to understand before they go into that.
Yeah, that's huge. And, kind of in combination with it, this is not SBA related, but also a lot of times if you are leasing your space, the landlord also is going to want you to personally guarantee that. So now that's not always the case, but a lot of times I'm seeing a lot more now. So a lot of times now you're on the hook for your personal house and you've got a personal guarantee on that lease, at least for a portion of the lease. So
Yeah, absolutely. And they will typically try to push you around and get you like a full personal guarantee. But realistically, like that's never your attorney should be pushing back against that. Like the most, like we agreed to a good guy guarantee. So it was 1 year. After that, if we leave, like it's on the business. And if we're going out of business year 3, like they're not going to get anything from my corporation, because at that point it's going to be bankrupt and they're just going to have to refill the space anyway. So that's what you should be pushing for, and never personally guaranteeing that space. It's just the landlords typically trying to strong arm their tenants.
Yeah, absolutely. And this is, I mean, I think that, not to kind of going down a little bit of a rabbit hole here, but not to, belabor the point, but that is a good reason why you need someone who kind of understands this business to help you with that. Cause it's very easy to sign a lease where you're on the hook for 25 years for this lease. So, 18 years down the line, something happens or whatever, you're still on the hook until that option is up or whatever the case may be. So definitely a case for having somebody who understands the business help kind of walk you through this whole process. Okay, so on the con side of the SBA, you got that one-to-one collateralization, and that actually is something to consider too. I hear a lot of people who are attracted to the SBA because of the lower down payment requirements a lot of times, but they may not have any collateral for the loan. Are there any kind of options there that you're aware of, or is that sort of like, okay, well?
So yeah, and that's a great question. So with the SBA, if it's there, like their motto is, if it's there, they will take the collateral. So for example, if somebody just purchased a house, they have no equity in the house, that doesn't mean they're not going to still approve the loan. It's just more of, okay, if it's there, we need to take it, but it doesn't completely exclude you. If you have everything else right, you have good income, you have a down payment, you have a good business plan, you might be in a low risk industry. Those are things that all play into your court, so to say, and also the way you approach it. So it's definitely more of a holistic thing. It's not a zero sum thing where it's one thing determines it or not.
Yeah. Okay. Awesome. All right. So when it comes to qualifying for an SBA, what's an SBA lender looking for in order to get you qualified for a loan?
Yeah, great question. So now the way I kind of got into it, and this is something like I really stumbled into it. So when I first did my store, I knew, okay, I was moving along anyway. The lease was getting signed. I was going to need some sort of financing. And I knew at the end of the day that the SBA was just going to be it's just one possible component in the outcome. So I was just going through with it and decided, okay, I'm going to try for this route. If not, I'll go equipment financing. If not, I'll raise a little equity for it. So I had multiple options. Now, what the SBA is looking for is typically a full picture view of your business. So they're making this decision on whether to award you $900,000, $1 million based on what they're seeing on a piece of paper here. It's like if I buy a piece of commercial real estate, a 10-unit apartment building, the bank knows the address of that apartment building. They know what the market rents are for that area. So they know that if I default, there is this physical, tangible asset that they're lending against. So it's very, very easy for them. So now with a business that doesn't even exist yet, this is just an idea that you're pitching a bank on. You need to make sure that you put all of that color and detail of what this business is going to be into a business plan along with your financials. And that's the thing that's difficult to articulate that along. Like the first time I did it, it was weeks of me just doing iteration after iteration after iteration to make sure I had everything. I mean, we included stuff to the fact that as a kid, I grew up in the area, that we knew the shopping center, like all those little things play into it because if you live in the area or any of those little nuances, you were able to provide more color to that picture, so to say, that you're presenting to these underwriters.
Yeah, that's good. And I mean, I think that helps give a sort of a picture of what to be prepared for if you are going after an SBA loan. You mentioned earlier a business plan. I know SBA wants to see kind of what your business plan is. How did you develop a business plan? Do you have any tips for a business plan?
So the way I started it was I literally just started from Googling. So business plan and literally took it like just devouring dozens and dozens of them. Like some weren't going to apply, but other things, but you're just literally taking bits and pieces and figuring out how to make it your own and cover everything you need. So that was the most difficult part when I did it was the fact that I was starting from scratch, and if you're not an articulative writer, which I am not, it makes it even harder. So because you need to portray everything through just text on a page.
Yeah. And actually, one tool that we're finishing up development of right now that hopefully should be out by the time this is out is an actual business plan builder to help just kind of streamline that process. And there's going to be, some nuance in there, but it's going to get you a really solid base for a business plan. And if you need to, you can go in and tweak it and stuff, but that will give you a very solid start to a business plan. And then you can, you'll have that available to, whether you're doing an SBA loan or if it's just for your own sake to help you, figure out how you want to organize your business or working with another lender or whatever. So check that out. I'll put the link in the show notes or down below if you're on YouTube, if you want to go check that business plan builder out. The other thing, oh yeah. Okay. So I've been taking notes, a lot of notes. So I want to make sure I hit everything. Another thing that you mentioned is financial projections. Can you talk about how did you put together financial projections for this business?
So the way I did it was, again, pulling from my corporate finance background. So that's the hardest thing I think people are going to be faced with because the numbers really aren't going to lie and the underwriters really rely, like that's what they're looking at. So for me, the way I really did it was how people assess this industry to begin with. Okay, this industry is assessed based on turns per day. Whether you agree with that or not, I don't necessarily agree with that. I think it's a crappy metric to use, but that's how it's assessed. So that's how I'm going to translate this financials into. So, okay, what is the size of your store? Okay, that's your size. It's 3,000 square feet. And now you're just plugging in little things and you're building that house. So this is the lease cost. This is my equipment mix. So how many 80 pounders, 60 pounds, 40s, 20s, and so on that you will need in that space. Okay, so now you have that understanding. Well, what are you going to price them at? Okay, each one is priced at this price point. So now you could start to extrapolate what your revenue is and what you need to do and achieve to get to your break even. A lot of this stuff is using assumptions because if you don't have a business that's running, you're really just kind of going with, okay, this is a percentage of this and doesn't make sense. And there's a tremendous amount of resources out there that allow you to get to that and drive you to those things in a conservative way. So if your North Star and how you're going to present to these people is 5 turns a day, that's where I need to get to. Well, you're not going to open the doors and do 5 turns a day. You need to be laying out a plan on how you project this business to grow. So if you plan on being profitable or doing 5 turns a day after 2 years, well, now there's your 5 turns a day point, and you now have to backtrack into a reasonable growth rate from day one. So it's all those little things, but when you look at it, I need to build this whole financials. Yes, it's extremely overwhelming, but when you break it down into very tiny pieces, you're able to kind of figure that out and piece it together. So things like your utilities. Well, I don't know what my utilities are going to cost. Well, okay, ballpark new build, your utilities are going to run 20% of your gross. Well, let's make it 22 to be conservative. Doesn't matter if your water expenses is twice as much as it should be, or your electrical expenses is not big enough or whatever. Not really, because you're still sucking up 22% of your gross revenue coming in and just putting it to the side as an expense. So that's the things that matter versus it being absolutely perfect. And just being super, super conservative and realistic as to where you will go. Typically, on my projections, when I present these things to customers to give to the bank, it's like they're not even turning a profit till halfway through year two, and that's what you need to be. You need to be able to endure, because if all things go well, sure, it's 18 months to 2 years. But if you hit some hiccups, you hit a bad time, you hit some unforeseen expenses, or whatever it is, that very well could be 2.5, 3 years. In the pictures of 15 or 20 years, it's tiny, but it's huge if you can't get there. So that's the other biggest thing, is just being super realistic and conservative on your business plan and the numbers you expect to achieve.
Yeah, and real quick, I just want to point out. So you're what you're describing is for your build out, and I would actually say that the numbers are probably fairly similar to that if you're buying like a zombie mat and you're retooling it. Now you do have the benefit of having a customer base, and that could be at varying levels, right, from the get go. And so it might shrink down that timeline of getting to your 3, 4, 5 turns, whatever it is that you're trying to get to, because you get a little bit of a head start when you buy a zombie mat, even though it's not, great. But I would say that is probably pretty typical. If you're buying an existing laundromat and it's already performing, you should be cash flowing day one. That is the goal. That is the plan. After all expenses and loan payments, you want to be cash flow positive day one. Laundromats, at their core, are a cash flow business, and we buy them for cash flow, to get the kinds of returns that not many asset classes other than laundromats and maybe a select few other businesses can really achieve with the kind of flex time that laundromats can offer. So path to profitability and projections of profitability probably fairly similar with a build out versus and a build out and like a zombie mat versus like an existing performing laundromat, which should be cash flowing. Just want to make that
Yeah,
connection.
absolutely. So that, like, day one, yeah, if you're buying something that is already in business and isn't a value add store or zombie mat, then yeah, you should be cash flowing day one. But even those things, it's like you need to make sure you're taking into consideration all the right factors that go into it that be presented. So, for example, if you're taking over a store that is at a option point, so this person had 25 years, after 10 they just wanted to get rid of it, they've made their money, and they want to sell it at the peak because now they're selling it to somebody. Machines are only 10 years old, and this person now has 15 years left of runway to run this business. So they could take a loan out for 10 years, 7 years, and still have another 5 to 7 years of profitability post the loan being done. So that's typically your best point to sell. But if I'm buying it and their rent is $7,000 a month, but it goes up 10% after that break point, I need to make sure I'm looking at it as, what am I paying today? What will I pay the day I take this over? I need to make sure that my rents reflect that. That this person wasn't paying themselves any sort of salary. Well, I need to make something on that. This person owned it free and clear. Well, now I need to factor in my debt service and figure out all those things that the SBA is going to look into, whether it's a new build or a pre-existing store, and that they want to see that you're thinking through it each step of the way, so to give them that level of comfort. Like, I always go into this thinking, what could they possibly ask me and come back and ask and make sure it's addressed in one way or another. So putting on the hat of the underwriter and saying, all right, if I'm assessing this, what are some of the questions I may have, and can this business plan answer it?
Yeah, yeah, genius stuff. And when I talk about valuation of a laundromat, an existing laundromat, I refer to that as that's pillar number 3, which is determining the trajectory of the laundromat, and that has everything to do with, yes, you want to look backwards to see the performance of the laundromat over time, but you also want to look forward a little bit too, because things like rent jumps, things. I mean, there's a whole bunch of things. Like here in Southern California, we just had massive utility increases, right? And so when you look back over the last 12 months, you're going to see one number for utilities, but when you look forward, you're going to see a pretty significantly different number over here. And so you need to factor in not necessarily the performance of what it did, but what it's going to do when you take over. I thought you nailed that perfectly. That was great. Okay, so SBA stuff. Well, and maybe you know about this, maybe you don't, or know the answer to this, or maybe you don't. But can you utilize SBA for an existing laundromat purchase?
Yes, and it's actually like the hierarchy it's going to go in, which is going to be easiest versus most difficult from a laundry industry standpoint. Is your hardest sell is going to be trying to get them to provide you funds for a new build out, because they look at it just like a startup. You're building this business from scratch. You have no revenue, no customer. So they're just giving you money with the hopes that it's going to succeed, and you have to sign your financial life on the line for it. Your second is going to be a store that is poorly managed, but it's there, and you're have the opportunity to turn it around. So again, they see that there is some value there because there's a customer base, there are machines, and your business plan will discuss as to how that will turn around. The top one or two, the top one, might be tied, is going to be ones that are successful or ones that have the real estate, because now they are segmenting that loan. Part of it is for the purchase of the real estate, which is going to be secured by the real estate. The other portion, which is going to be much smaller, is going to be for your build out and acquiring the space itself. Or if you're buying a value add where you're owning the real estate, but you need to do some improvements, all that improvement you're doing is now going into the real estate that you own. So if it fails, you still put 150 grand worth of improvements into the space, and that still did increase the value of that building. So those are typically going to be the easier ones to get because it's collateralized by the real estate itself.
Yeah, and I've found that once you throw real estate into the mix there, SBA, they just welcome you with open arms. They're like, yes, we know real estate.
Oh,
We love you.
it's
And what I've
it's 1,000%.
and what I've seen is a lot of times the SBA will just almost kind of even ignore the laundromat, to an extent, and just say, hey, basically you're buying the real estate, and yeah, maybe some laundry machines are going to get left behind, but they're looking at that real estate and basing valuations and repairs and improvements, those kinds of things, based mostly on the laundromat or on the real estate a lot of times. So once you throw real estate into the mix, so if you're in a market where you have the opportunity to buy the real estate with the laundromat, or you just find that opportunity around there, that is a prime opportunity to go that SBA route.
Oh, absolutely. And the thing is, the way it's structured is night and day different. So now, if you're purchasing the real estate as well, now let's call it 2 million, $1 million for the real estate, 600 grand for the equipment, 300 grand for the improvements, and you're bringing 100 grand to the table, whatever. Now, that million that you purchased for the real estate, that's going to be amortized over 25 or 30 years. So now that's going to substantially reduce your debt service on a month over month basis. So that's a massive win. That 300 grand that you need to build out your store, well, guess what? That's capital improvements to the space. That's going to be rolled into your 25 or 30-year loan. So now that 300 grand that typically in my case is spread out over 10 years, it's going to be spread out over 25 or 30 years for that other investor. And then now you're just left with the 600 grand for your equipment that's going to be spread out over the 10 years. So once you throw the real estate in, it substantially changes the dynamic of what your P&L looks like for the better. It's just easier said than done. I mean, you need to hope to find a commercial space that's vacant, that's for sale at the right price, or a laundromat that's going out of business, or one that's not in too close a proximity to another laundromat. So yeah, that's amazing, but it's easier said than
Yeah.
done.
Well, and especially in yours and my markets, right? Where the real estate is it's tough to come by in New York and LA. But there's a lot of places. I mean, I do consulting all over the place. And, for whatever reason, Chicago seems to just have these opportunities left and right. I don't know what it is about Chicago, but go buy some real estate with Chicago. I don't know. But
Yeah,
yeah, but other places, it's much more available. And I'd say probably even the more rural you get, that word's always risky for me to try to say, rural you get, more likely it's going to be a mom and pop who owns the real estate and the laundromat, and they're trying to sell it as a package deal more often than not.
yeah.
So, yeah.
Like we bought a building in Massachusetts that it was an apartment building, and the owner owned this small little laundromat that was downstairs. We ended up spinning that off, but it's like so much easier to get this stuff in other markets that it's usually beneficial to
Yeah,
do.
and real quick, because I love this concept of buying the real estate with the laundromat. Real quick, I see investors who do one of three things. So I just wanted to throw this out there because I think this is really cool to be a thought exercise if you find yourself in this opportunity. So one of three things that I see investors doing. One is buying the real estate and the laundromat and keeping both of them, right? The other one is buying the real estate and the laundromat and writing up a lease between the two, and then increasing the equity in the property and selling the property, harvesting the equity and deploying it wherever else they want, doing it over again or whatever, just creating that equity. The others going the opposite route where they write a lease up with the laundromat, sell the laundromat and keep the property and let somebody else run the laundromat in their space. And so I think that all three of those options are very interesting, and there's pluses and minuses to both. But I think it just kind of illustrates there's a lot of flexibility, not just in the financing terms, but actually in the way that you can kind of move your money around and build your portfolio when you have these opportunities. So I kind of geek out, I get excited about
Oh, yeah, absolutely. I mean, that's what we ran into where we were out of state investors. We were owning 5 hours away from us, where it didn't make sense to try to manage a 800 square foot laundromat. It was more beneficial for us to just sell off the laundromat, get that cash infusion and that long term lease.
Yeah.
And all those things are, once you throw the real estate in, is extremely attractive to SBA. They love that. It gives them security, and it just makes it so much easier on the investor side. But like what you're saying, it's expensive in most markets, and people that are just trying to get into the industry, they're just trying to get a store. They're just trying to get their feet in the water, and adding that real estate in is just larger and harder.
Yeah. Yeah. Dude, this has been incredible. I know we kind of jumped on this call planning to talk SBA loans, which I actually was very excited about, and very cool to hear about your story. But you always run the risk when you talk about loan products or taxes, those kinds of things where it can just be a very dry conversation. But this was awesome, jam-packed full of such good information. Before we wrap this thing up, anything else we need to talk about when it comes to SBA loans or financing in general?
Yeah, so the thing I would say the most is be extra, extra conservative. Where if you realistically think you're going to be making money at the end of year one, like that's fine. You know that. But want to position yourself and make it look like on paper you won't be profitable till year two. If you could look at those numbers and be okay with that worst case scenario, then you're ahead of the game. Like I love the Mike Tyson saying everyone's got a plan until they get punched in the mouth. It's the same thing where it's you got that plan to be profitable at the end of year one, and if that's what you're planning for and things don't go to that plan, you're screwed. So I'm always plan for the worst. Like my clients see me, they're like, well, wait, I'm not going to be making any money till year 2.5. I'm like, yeah, that's what we're investing in this business based on. You have 15 years ahead of you. We don't care about the first three. We're trying to keep you in business for the 15, not get you out of business in 2.
Yeah, I love and I'm the exact same way. I love taking the conservative approach because listen, if things go better and you're profitable in 6 months, not 2.5 years, all the better, right? Cherry on top.
Yeah.
But if you know that, hey, I'm looking at 2 years, 2.5 years of runway, and I'm planning for that, and I am prepared for that, and it takes that, you're okay, right? But if you're counting on that thing, to be profitable in the first 6 to 12 months, and it's not, then you find yourself in a situation where, you could be dead in the water before you really even get started. And so I love the long-term approach there. And dude, killer stuff. So good. Real quick, just to sort of point out one more time, if you need help building the business plan, we got the business plan builder. I wanted to mention too, we also do have a financial projections sort of calculator that can sort of help you with that. Again, give you some guidance on how to get started with that. So check that out. Links are in the show notes, or if you're on YouTube, down below. Brian, incredible stuff. I know that you help out other owners, especially going through that SBA process. What's the best way for people to get a hold of you if they want to talk SBA or laundromats with you?
Yeah, so they can get in touch with me on my email, brian@smolincapital.com, Brian with an I, or on my Instagram at bsmolin.com, at bsmolin. So, and I'm usually available at any time. So those are the best ways.
Awesome. And I'll have links both to the your email address and your Instagram account, again, in the show notes or down below if you're on YouTube. Brian, this is awesome stuff. Any parting words of wisdom or encouragement for the people?
Just make some decision instead of no decision. And it's better to do something than nothing. And just the analysis paralysis, you're not moving in any direction. So a bad decision is better than no decision at all.
I put you on the spot to come up with something wise to say. I just got to say, you delivered. That was incredible. I'm writing it down.
Why, thank you.
Make some decision instead of no decision. That is, I don't know. I might get that tattooed on myself or something. Awesome stuff. Brian, really appreciate you. And hopefully you'll be out there helping out a bunch of laundromat owners get into the business. I will be super pumped if that happens. So make sure you reach out to Brian if that's something you're interested in. And see you guys next week.
Thanks for having me on.
Appreciate it. All right. Hope you loved that interview with Brian. So much good, solid information. But again, don't forget, here's your one takeaway. I always say, hey, take some action here. This one's easy. Go to laundromatresource.com/events and sign up to come to this live Q&A that I'm doing with Brian Smolin. It's going to be a great time because we're going to talk laundromats. We're going to talk SBA loans. So come, bring your questions, have a good time. Always, it still blows me away, but always there's a who's who of laundromat owners and legends that show up to these live Q&As and are answering questions in the chat there too. So make sure you come join this thing. It's going to be a lot of fun. Basically, I mean, it's going to be a party. And what kind of party is better than a party that's talking about laundromats and loans? Like, I cannot think of a better party. So come join the party, laundromatresource.com/events, and join that live Q&A with Brian and I. All right. We'll see you guys there August 17th, 4 p.m. Pacific, 7 p.m. Eastern. Peace.